First Trade, folks, if you do not know.
Anyway, this is a show where we're educating new investors and traders.
Oh, hey there. What's up, YouTube? Welcome back to First Trade. It's been a couple of weeks. We had a little bit of a break in the show, but we are glad and excited to be back, folks. We have a pretty fun episode for you today and an interview that I think everyone's going to learn a little bit something from. So if you don't know what First Trade is, or if you didn't pick it up from that intro that just played, basically we're a show that's targeted at beginners like myself, who I'm very much so a beginner. First episode, made my first trade, and we're just trying to figure things out. So we're kind of going along, learning together, growing together. And of course, I have my wonderful co-host, Mr. Michael Murray. Mike, what is going on?
What's up? How's it going?
You know what? It is going. I was very congested today, but I've since cleared up, so I can talk normally. So that's cool.
What a
Pretty
joy
happy about that.
That's nice. Did you do that intro on purpose where you like didn't see the camera for a second, but then you like showed up and saw it, or was that like just accidental?
I don't know. Did I? You'll
Sure.
never know. No, but hey, you know what? My crypto portfolio right now, I know this isn't strictly a crypto show, but my crypto portfolio is absolutely ripping. I cannot be, happier about that. So that's cool.
It's a good day. You know what my favorite?
I know everyone's
coin is,
but
I love Voyager token, dude. I'm up 90% on that since I bought it.
Oh, you're with Luke and Raz on that one.
I went with Luke's advice on that one. I trust Luke on some things. Voyager is one of them. I'm all about that. Yeah, I'm happy.
Awesome. Well, hey, it's been like 2 weeks since we've done the show. Anything interesting in your portfolio?
Yeah, what was the last thing I bought? I bought those companies that like do the paint for jet planes because all those.
Yeah. What's the follow up on that?
I lost 6%. So kind of shitty, if I'm being honest with you. Didn't really work out that well, but it felt like one of those that had a really cool thesis, and I could see the potential behind it because there were like 350 different jets that have been sold in that week. So I thought it was a cool idea. I tried it. It didn't work, but I thought it was.
Hey, you know what? You win some, you lose some. But the important thing is like, okay, I get the disappointment, right? Like that was a pretty solid thesis. I was on board with you on that one. Just makes sense, but sometimes things don't work out that way, and obviously the stocks don't even always trade to performance. So, what can you do? Me personally, I haven't done anything all that interesting. Honestly, I haven't touched my Webull in a minute, to be honest. But
I did hear you say, though, you asked me what's the float on that stock like 2 days ago. I was really impressed with that question. That's a really professional sounding question.
Really setting the bar high for myself there.
I was impressed.
All right.
I liked it.
Well, you know what? It's 3:07. We got till 3:30. Let's stop bloviating. Let's get to the juice of the show, folks. We have a pretty epic guest for you as always. Today on the show we have Miss Izzy. If you're a follower of Benzinga, you might have seen her appear on Get Technical. But basically, she's been trading for a while, over 10 years. She's not new to the game. She's in actual trading. She works on the floor, or I'm not sure if she still does, but I know she did at some point. And comes from a finance background, and she's big on technical analysis, and that's what we're talking today: technical analysis, if I can pronounce it, and chart patterns and things of the such. So, without further ado, Miss Izzy, what's going on?
Hey guys, how are you? And thank you for that intro. I no longer work in power trading. That as of May.
Okay, there we go.
I did that for 7 years. I did, so it's fun.
Nice,
awesome.
Yeah, good.
So, before we get too far into it or anything like that, just for the people who don't know you, could you tell us a little bit about yourself?
Yeah, so primarily for sure, a day trader and a swing trader, but technical analysis, of course, is key. But I think, so this is going to be like a little bit of some spice here, because people always think that I'm just a TA trader. I'm not. I'm a sentiment and rotation trader. So I'll trade. So I always say that you have to know what kind of market you're trading for the price action to be there, right? Because there's no TA that's going to come into play if the sentiment's not there. So kind of just knowing which sectors are shifting, rotating into. Like right now, I'm watching CAT. You guys are going to be in a live trade with me because we're trading this right now. So we can kind of share the screen and look at that. But yeah, primarily focused on TA, market rotations, lots of sentiment events, catalysts, things like that, working our way into them.
Nice.
So just to clarify, because I mean that's kind of my role on the show, is just to make sure everyone is understanding what's going on. And so obviously when you're talking about like sentiment and rotation, so say you're trading a specific sector, right? So you're saying that you have all these rules of technical analysis that can apply and help you make a trade, but they don't always apply unless, say, we're already in an overall trend in a certain direction, or if everyone's kind of feeling a certain way towards the stock. Is that what you're trying to say?
I think it's just the timing of it. So timing the market's one of the toughest parts, right? And you can have the best chart set up, but if you're a day or two early or a week early, it's not going to work in your favor. So it's just knowing the key points and when to trade those specific sectors, right? So that's kind of what I try to focus on. That way I can time the trades properly, because for people that are day trading, you really need that timing, right? Especially if you're trading options or scalping or anything like that, you have to be, your timing has to be pretty accurate. So that's mostly what I mean by that. Just knowing where to focus during that specific time, because there could be some major events happening that week that you're unaware of, and that could actually be an inverse correlation to the stock that you're wanting to play, which can completely shut down that whatever it is that you're looking at, whether it's a tech play, a communication stock, doesn't matter, right? EV, infrastructure bills, things like that. There's certain things that really will dictate whether or not you're the price action of the trade and how it's going to move. So for instance, this week, my big focus was banks, right? So my my weekly report that I do, we put in banks as kind of the top sector, along with some industrial and material plays. So we've been playing a lot of defensive names, a ton of lower volatility names like WBA, CVS. That's kind of what we traded today. Caterpillar, those are all some really popular ones, but most of it was because we knew like the federal budget balance was this week. I knew there was a bunch of growth stocks reporting, so I kind of shifted away from those for today and tomorrow. It's just kind of knowing the timing of it, right? So kind of knowing when to execute. We traded crude early morning because we knew inventories were coming out. So we waited for inventory numbers to be posted, traded that really nice crude run earlier this afternoon. So that's kind of what I mean by that.
Nice. Really quick question too, before we jump into other stuff. I know this is kind of on topic. You might have already kind of referenced this a little bit, but the infrastructure bill that just kind of got through the Senate, does that change your perspective on any of these defensive stocks, like anything bank related? Do you have any kind of like insight into how you're going to kind of pander to that?
Yeah, and I think a lot of it too is where the TA comes in as well, because a lot of these names have, if you're looking really far out, so for banks, for instance, and a lot of these defensive names, whether it's FCX, CLF, we've been trading a lot of material stocks this week. CLF is one of the bigger ones, AA. I think for a wider scale, I start going as far out as a monthly and a quarterly chart. And when you're looking at the banks and material plays that far out, they still got a ways to go from those 2008 highs, right? So I think in terms of that, it kind of correlates really well with the timeline of when that bill is going to be passed and all the sectors that will be impacted directly from that, not just materials and banks, right?
Nice. Yeah, no, that makes total sense. It was interesting because I saw so many different perspectives, like earlier, this morning and then last night, like if it was going to go through. So just curious for your take on it. But no, that's awesome. That's really good insight. Appreciate it.
No problem.
Rohan, do you need to ask your first question? We kind of skipped right over it.
I skipped over the first trade question. But so sue me. I'm a little bit more curious about what we were talking about prior. I'll get to that question. So you're talking about timing the market, right?
Yeah.
I'm curious what advice you have to beginners or people who are getting into this, to how to stay on top of that, where to look, and where to make sure that you're actually, timing this right and hitting the right sectors and things in the right time.
Yeah, I think a lot of that has to do with just kind of making a calendar for yourself, like really keeping track of earnings, right? Knowing which sectors are reporting first and last. Knowing the weekly common events that happen, like every single week, whether it's jobless claims or inventory numbers and that sort of stuff, but also knowing any other of the major events that are happening that are maybe a monthly report, a quarterly report. Those things will really impact whatever it is that you're trading, but also knowing what's inverse to what you're trading. So for instance, if you're trading, sorry, I'm like really distracted with Cat just going nuts right now. But if you're trading, for instance, something like Bitcoin, right? So kind of keep an eye on the physical miners like gold and silver. If you're looking at banks, like really keep track of the, of the 20-year and the dollar, like all those sorts of things really matter. For crude, for instance, like when growth was getting a really big pull back in February, March, I was super long crude. It's kind of just like pinpointing things together so that whether or not you want to short that sector. Like you could also go short the opposing sector, but just knowing what's shifting into what. So we've been long power names for the last 3 weeks, and obviously I have a really strong background in power and gas, but like just knowing the actual timing of it. So usually power and gas prices surge in the summer months, right? August is usually a big month for power. So just knowing to shift back into power names, maybe shift a little bit away from some of the other sectors that could be a little bit correlated to power and gas. And we'll know back in. So if we get a nice run here on power over the month of August, which we have been, if you've been watching like NEE, names like that over the last few weeks, we know back like once winter arrives, that's going to be another season, right? So same thing with the gas prices back in, like for crude prices back in February, March, like that's the deep of winter. Like usually the timing of that. And I think for me, it's because I have a really strong commodity background that I kind of know that commodities really play a huge factor in the seasonality of trading, because almost every sector, if you think about it, is actually core, it's all kind of based around commodities and materials, right? So just having an understanding of that, but really track the earnings. So a lot of people always think that if they're playing an earnings on a play, that they have to play it the week of or the day before. That's not true. So usually for doing an earnings run up, we're playing it probably like 2-3 weeks ahead of time, right? So then that way you actually can catch that nice run, and then you're avoiding that sell-off either into earnings or post earnings, and you kind of know which sectors to focus on. So right now, for instance, timing, tech was approaching last month, so we knew to kind of go long tech earlier in July versus end of July, and you saw how tech was selling off afterwards, right? And then kind of shifting into we have growth is actually the last sector to report right now. So I'm thinking that some of them right now will sell off and then maybe get a later surge, which again, it's that seasonality. Like cannabis names, they usually run later in the summer months. And we kind of knew to focus back on lower volatility names like the consumer staples. They're the first to go. So when the markets were crashing, I think it was end of June, maybe end of June or early July, when things started to kind of come down again on growth and tech.
Yep.
That's when consumers were running, right? So consumer staples were super green for a week or two. And that's what we were playing because we knew that they had earnings coming up first before all these tech names report. So it's kind of just like shifting and just getting really familiar. I obviously trade a lot of the same names over and over and over again. I'm very selective with what I'm trading. So I have my go-to for every single sector.
That's awesome.
Okay. Awesome. Yeah, no, and some funny comments in the chat. I'll come back to them in a second. But I guess in general, what I'm getting from this is like, say a beginner, right, is probably not going to be always hitting the same amount of sectors or stocks that you might be looking at, even though, you're mentioning you have a set of names that you're typically looking at. And I know quite a few number of people who come on the show that they always talk about having the stocks that you look at and focusing on those, especially when it comes to day trading. But whatever it might be, it seems like there's obviously a lot of historical data and points like earnings and things like that you can kind of gather information to figure out when to be looking at a certain sector. So yeah, appreciate that. So to that comment, some Zeke, sorry, I don't totally know how to say your name, so I apologize. Cat like in caterpillar or cat like in cat? So I think it's Caterpillar.
I can actually share my screen here if you guys want to start looking at it.
Yeah, so
yeah, for sure.
Yeah, that's what I was thinking. It might be a good idea.
One that it was a live trade that we were doing. Okay, hopefully it lets me. So Cat, for instance, right before we jumped on, I just told my group, make sure you guys are watching because Cat's about to break right here. So, and I'll kind of start this off from scratch if you guys want, just so that it's a little bit easier for people in here. But I'll always have like a 1 minute chart up. But really, when I'm extending far out, I'll usually go, I'll usually start with that daily, right? So one of my strategies that I like to use is like that regain of that 5 day. I like using a 5, not an 8 or a 9, because I feel like it's an earlier trigger. And sometimes I'll use that on a 4 hour chart. so I can be a little bit earlier than everyone else. So for instance, right now, AMD just did a reversal on a 4-hour. And I just waited for it to regain because AMD has been crashing for the last few days since that run up. As soon as it regained that 4-hour, you just saw that reversal it just had over the last 2 hours here, right? So it's kind of like an earlier trigger for me. So something like CAT, I figured is a good defensive play this week with the banks. And so we're waiting for that. We're waiting for that regain here. That's where we got that. But on a day like today, for instance, I'll just clear the chart here just so that it's nice and fresh and everyone can kind of follow along. One of my strategies I use is an open higher, so a gap open higher. So you see how this kind of opened below that, above that close. And I'll usually look to see something that I like is usually when there isn't too much of a range between that high and the close. That's usually a sign it's going to gap open the next day. So write that down because it means that it doesn't really need much momentum for it to continue gapping, right? So that had a pretty good range between the close and the high. So I'll usually go in and I'll see if the stock opens above the close, if it back tests that previous day's high and bounces off, and then I'll usually use, so you always have to look left. So I always try to use a midpoint. So if it breaches that high, you know, that's what I'm seeing with my eyes, right? Like that's the next midpoint. I don't want it breaking that. There always has to be a first midpoint, right? So that's my midpoint there. Just by glancing at the chart, you can see that this would have been the break, right? So this kind of candle in here, you're obviously working your way up in here. For new traders though, I really recommend going really far out because I feel like sometimes when a newer trader is looking here, they don't really know how to gauge this, right? Because there's so many candles in between here. Like it's pretty clear that there's some resistance in these wicks right here. But usually if you extend out far to a weekly or a monthly, it makes it a lot easier for you. So now when we're looking at this weekly here, the reason why I liked CAT in the first place for this week, there was a mini bull flag on that weekly, this right here. And it regained that weekly 5-day. If you guys can see that.
Nice.
So when you're saying when you're saying a bull flag, like, so I kind of want to bring this up as well because we're talking about chart patterns and what they actually represent. Bull flag is a common one you hear. Would love for you to just, like, as you explain that, kind of talk through what it means and why you look for those.
Yeah, I find that it's usually a continuation pattern and a break of a trend. So we can actually use some. This is more of just a really mini bull flag on the weekly, but we'll use a real-time one from today on Caterpillar, from a 1 minute to a 5 minute to a half hour to a 15, just kind of how to merge it all into one bigger picture, and how to kind of see that bigger picture happening. So how I saw CAT getting that bigger break before this break happened, right? So this is kind of the early trigger on seeing the play. So this would be the kind of mini flag here, and then that regain. But if you skip over to that weekly, you can kind of see how if you just use maybe the midpoints in here, you kind of don't really need too many levels of resistance in there, right? Like now you're kind of working your way into this candle. And I'll usually tell new traders to skip all the way over to a monthly, because normally when something regains on a daily and then a weekly, it's likely testing that monthly, especially if it's been in a downtrend for so long, right? Like something like CAT, this is why I'm really bullish right now too on defensive names, because a lot of them are regaining their monthly 5-day or at least testing it. So, and we'll know markets usually crash mid to end of August, right? So if we, or get a bit of a correction, not crash, sorry, but closer towards that end of August, and that's usually when earnings are kind of drying up, which is exactly what happened in June. Earnings dried up. When earnings dry up like that, that's usually when we start seeing some corrections. And if we get a regain on a lot of these defensive names on a monthly basis, that's kind of how you'll know that markets can kind of start, you know, the defensive stocks are really what kind of hold up the market during the downside corrections. And the timing of this right now is great because August and September are usually not the best of months for the overall broader market, especially since earnings are done by then, right? So the last ones to report, I think, are the first week of September. So by then we'll really dry up and there's not too many catalysts to work our way into. So that's kind of what I'm looking here right now. So my mind is like, okay, well, this thing could be testing that monthly 5-day, which is 223. And we're kind of approaching that. But for a newer trader, if you really wanted to, you could have just went in and used just the monthly sticks. You don't really have to look into too much here. It could just make it a little bit easier for the eyes. And that way, or even just using those averages too. I find the averages are an easier trick for newer traders because sometimes they can't visually see the actual wicks and sticks that I'm looking at. So sometimes using those regains or the targets as just a means, like a kind of a guesstimate of the level that it's going to go to. But just by glancing at this, I know it's trying to break into this wick here, kind of right in there. And that weekly spot was pretty clear that there's a law of resistance right up in here, right? Even though it's kind of already worked its way into that candle. So now that I've got most of my spots in there, we'll skip over to that 1 minute just to kind of go back in time from this morning here. So this was the very early morning. This was that back test of that previous day's close and that high right up in here. This was our midpoint. So the 214.07 is our close. We don't want it going near there. For continuation, you don't want that. You want it to hold that midpoint, right? So if our midpoint, our lower high, I guess you could call it, you can see we stalled just above that. So 214.51 over that 214.57. When I glance at something like this, so I'm seeing, whenever you see candles that are kind of making a wall like that together, that's likely forming something on a wider scale, especially considering it's cracking that 216.02 resistance. So this is, and you can see that 216 became really strong right here, right?
Yeah. Yep. And really quickly too, as you're looking at this, so obviously we're looking at testing lows and stuff like that, but we're also in the chat too, just really quickly to clarify, what's a regain? Just really simple definition of that.
When something kind of regains over that level. So the 5-day when it's trading right back over it.
Perfect.
Yeah. And that's why I say you can use the 4-hour as an earlier indicator, because if it closes over the 4-hour, it's likely going to regain on the daily, if you don't want to wait a full day for it to regain. And then you're looking for that weekly and then the monthly test, right? So this is kind of on a bigger move play. And this has a lot to do with the infrastructure plays kind of moving up today. So
I feel like that's a good little tip there, though. You know, a lot of people obviously between the 60s and the dailies, but there's a big gap there. So
yeah, and I made this up, right? So it's not like something you'll find in a textbook. This is just stuff that I back tested and made up. So
awesome.
Yeah, I feel like it's really helpful. And if you start seeing things kind of shift off the lows here, so sometimes I like using a 2-minute chart because it kind of gives you the bigger sense of things. So on the 1 minute, I feel like sometimes people get scared when things are back testing. So maybe right here when it was back testing that 215.88, as long as the candles are closing above them, which they are, they're closing over that 216.02. You can see that, right? All these candles on that 2 minute kind of closed over that. And you can see it actually did shoot through that 219.05 and 31 resistance. Those were all those monthly and weekly levels that we had put on the chart. But to kind of paint this for you guys, this that I'm seeing here, this is kind of a morning star pattern. When I'm seeing these two candles and that little one in between there, that's a bit of a hammer. I know that that's forming something on a wider scale. And you can kind of see that there. So you see how this is kind of engulfing over that, but then you got this right here looks like it's forming a pole, right? And that's over a 5, 10, 15. So I know over a 15 or a 30, that's likely making a bigger picture, right? So I just kind of train traders to kind of start seeing things before they actually happen. So now when I'm looking at this on a 15, you see that bigger pole, right?
Gotcha.
And the pre-market highs, but there's also a tweezer here. So this is one of my favorite patterns, candlestick patterns. This right here, usually when you get that little peak higher, and this on CAT today was so symmetrical, it's like textbook, right? So it was a really, really perfect looking pattern. So this is a great one to use for today's example. Can
you talk through that tweezer a little bit? And
yeah, so like this one right in here. So these two candles right here. So usually you'll have to have the open and the close really leveled. Sometimes the tweezer can be a little bit lower, but that little wick, if you guys can see that there, just that little tiny stick high on the green candle, that's kind of showing some good price action there that bulls are trying to they're trying to take control there because they're trying to push that price higher, and the lows stayed really leveled. So it's not like it was being pushed down lower, right? And for me, the key here is it's not about the pattern itself, it's where that pattern was formed. So this tweezer was formed over that 215.87 spot. You guys can see that. That's where it was formed. And it was formed right below that 217.63. So I'm kind of combining it with my key levels that I'm using for my price action trading.
Nice.
And then just by glancing at that 15, it's kind of the same thing there with the 30. because I saw that pre-market price action. I know that's likely a bigger picture. You guys can see that. That's the bull flag it formed on the half hour, which likely formed on an hourly, which means on a wider time frame, Caterpillar is probably going to run over a period of an hour or two, right? Because I'm not playing a half hour time frame anymore, or 15. I'm painting the bigger picture in my mind where it's starting to form on a 15. If it's starting to form a pole on a 15 and a 30, it means it's forming a bigger picture on an hourly and a 2 hour. Does that make sense?
Yeah. So you're almost breaking it down to like a more granular state, but then looking at that from like a macro perspective too. So if you see these smaller changes forming patterns, you're looking for this on like a larger scale.
Exactly. And then now when you look back at the hour, you can really see that nice flag that even started from yesterday, right? So that was kind of that bigger flag there, which really tells me that over a period of probably a couple hours here, this thing has just been really trying to break to the upside. Like that's even the 2 hour flag. So I knew by looking at this that we're now playing with a half hour range here. And at this point, I'm thinking it wants to try testing that monthly 5-day, which is at 223 point, roughly, right?
Yeah. Nice. And so, I mean, obviously you can look to things like resistance and other points as potential pullbacks, but what are your signs or what are your patterns to be like, oh, maybe I should be looking to get out of this?
Sorry, do you mind repeating that?
Sure, no worries. So I'm just curious because you're talking a lot about, the upside. So wondering, as you're watching this, as you're seeing it generally trend upwards, what are the patterns or signs you would be looking for to maybe get out of this?
Usually a break below the flag. So like we could look at maybe even bearish patterns and some reversal patterns, like one today for AMD. Something else really is not really too much of the pattern itself, but the price action itself. So for something like CAT, I want it when it's approaching resistance here, I want it lifting off these higher lows. So you can kind of see that. That's the first, that's the second. It made us a third, a fourth, a fifth, right? So, but the key here was when it was shifting off those higher lows, it also was starting to make some higher highs, and it took out these levels in a single stick with volume. So I always look for the single stick breaks, right? I like things breaking with volume in one single minute stick. That's kind of so the higher lows and lower highs are for sure one of the biggest things, but breaking below my previous patterns are what I call bearish, right? So if you're looking at something coming back below where that flag was made, so something like AMD on that 4 hour that we looked at earlier. So we were looking at this back in here. I was looking to see if it would regain on that 4 hour. But again, something like AMD, this is a tweezer top on that 4 hour. That's bearish, right? So it's kind of the reverse of what we just looked at for that bottom. So this was a really bearish pattern on AMD on the 4th, right when it started to form that. And the reason how I knew it was likely going to maybe start forming a top there is just based on that close and that open and the range that it went in between, because it stayed within that same range, right? For when it closed, and I'm always watching the clock. And then the follow through. So the follow through is really important. So when I'm seeing the follow through here and I'm seeing these walls, so I see a big wall right here between that green and the red, that indicates to me on a wider scale, it's likely making a bit of a star pattern. So there was a bit of a shooting star down there on that daily. But if something starts breaking down into the pattern that I was initially seeing, so let's say, for instance, that 4 hour, this was the first flag that was made, the second, the third, it kind of just kept flagging on the way up. As soon as it starts to breach these key spots in here, and sorry, I already have all my levels on here, but I kind of wanted it to hold really tight on this regain here on AMD. I really wanted it to hold above this flag. I didn't want it kind of coming below this kind of spot right up in here. I wanted that range to kind of stay really tight in there. And if you see how it kind of made a bit of a channel there before it regained, and it's not the cleanest, but that is a bit of an inverted hammer on that 4 hour where it did look to regain. So then we're looking to trade it bullish for the next 4 hour time frame.
Gotcha. And I understood some of those words, not all of them. But
yeah, so it's kind of like if this thing were to break where my flag was initially created, that to me is bearish. So if this were to break kind of and close below that spot right in here, I would think that AMD was likely going to continue down to that downside closer to 103 and 101. And similar with even like looking at CAT. So for instance, if CAT this morning wasn't, let's say it was making that half hour flag, or that 15-minute flag. We'll go back to a 15. I like the open higher for confirmation. So that's kind of how I like confirming it, right? And just watching the clock. So seeing when that, so looking back at 10:30, I'd want to see when it was, what kind of price action it was doing at that time. So whether it was doing it right before that half-hour close. And if you pay attention, you'll start noticing that things usually start doing that right before that half-hour closes. And you can see that really strong price action there right in between here. So this is kind of like that 10:30 time frame when it was back testing that 215. And I'm looking and I'm waiting for that confirmation, which is that open higher. And there's my gap open higher, and then my break of that wick. And you can kind of see here too that it took out, besides taking out my actual levels, it started to really test in between this candle right here, right? But now I know on this next time frame, I want it closing above that spot, because even though it broke it, it didn't really close above it. It closed below it by 3 cents.
Gotcha.
Right? So I want to see that same continuation coming through. And as you saw it kind of pull back in these two 15-minute time frames, that doesn't necessarily mean the half hour is broken, as long as it's holding where my first initial pattern was made, and that's where my tweezer was. I don't want any of these 15-minute candles below that tweezer. It's broken at that point.
Gotcha.
Got it. Okay. Awesome. Appreciated that. So unfortunately, we are running a little bit over on our time today. I believe Spencer will be upset with us if we run too much longer because he started his show. But I did really enjoy having you on, Ms. Izzy, and appreciated your knowledge. Definitely some good tips, and especially that 4 hour one. That one's one that I haven't heard before for sure. So, folks, if you appreciated what Ms. Izzy had to say, if you want to follow along, maybe see what happens with her trade in CAT, then make sure to go check her out. Where can they find you online? This is your moment to plug whatever you need to plug.
Yeah, so definitely on Twitter. That's definitely my hub. I've got my Discord here. This is like my team. We're trading all day in here. So like we were watching, this is our IBM play from earlier. We traded that tweezer right here into this beautiful flag, right? So these are all like things that we're doing all intraday. You can definitely go to my website. I have like a weekly report that I do, but a lot of WBA, that was our bull flag from earlier. We caught that really nice move on Walgreens. So lots and lots of patterns and reviews that we're doing in there, but mostly Twitter, my Discord, my website.
Awesome. Okay. Well, we'll make sure to have those links in the description down below. So folks, make sure to check out her Discord and her Twitter. And Izzy, thank you so much for coming on our show.
Thank you for having me. If you guys
want more, make sure to go check out that Get Technical episode with Neil. That was a good one. I definitely caught a bit of that as well. But without further ado, that just about does it for today's episode of First Trade. Thanks, everyone.
Thank you, guys.
First Trade, folks, if you do not know.
Anyway, this is a show where we're